One of my greatest days traveling Japan was going to the Toto toilet factory. Yeah, I know that doesn't sound pleasant. That doesn't even sound entertaining. Why would you go to the Toto toilet factory? Going to the toilet is going to be the future of real estate. Yes, that sounds crazy. I know. Welcome to the Urban Property Investor. I'm your host, Sam Saggers, here to help you crack the code of real estate wealth. Today's show, a code cracker. We're going to dig into stuff coming your way. Yes, we're going to take a look into the future. If you like the idea of stargazing and understanding some future trends which are going to influence real estate, economics, and urbanity, then this podcast is perfect for you. You're going to have a great time. As you know, my podcast can last forever, so make sure you play the show in double speed, get your life back, spend your life learning as much as you can. And of course, if you can speed me up and do me in half the time, that means you can learn some other ideas around real estate. And of course, understand that all the episodes and podcasts I've done on the Urban Property Investor are lessons on real estate. So feel free to go back to the beginning, start from the beginning if you like, binge the podcast, which is some crazy 95 hours of content on real estate at this present time. So there's a lot to learn when it comes to real estate. And I think one of the greatest puzzles of property investment, one of the things that really inspires me to get out of bed every day is understanding what is coming next. I like to consider myself a bush futurist. Yes, I have no qualifications to say I'm a futurist, but I love stargazing into the future and understanding, well, maybe if we can put two and two together, if we know what's coming down the highway, we can make positive actions off the back of that. Now, caveat today to the podcast, I will probably cough. Yes, if you think the idea of listening to a podcast host coughing into a microphone is abhorrent to you, then don't listen today. Move on. Go somewhere else because you're going to hate today's podcast because I'm still suffering the effects of COVID and it makes me cough and it's annoying. In fact, every time I talk on the phone at the moment, I have to apologize before the conversation even starts. I'm like, I'm sorry. You're probably going to listen to me talk and I'm going to cough on you. So I apologize to you if I cough on you and that offends you. But I didn't create the pandemic. So, let's not, I guess, pick on the cougher. Now, let's get into the show, right? We've got some massive trends heading our way when it comes to real estate, and I want to cover off as many of them as I can so you guys are well placed to understand we need to perhaps just think through real estate with an open lens that things are always going to change. And I think when it comes to the idea of disruption, we are living in a decade where disruption is going to make or break people. There is just so much happening, isn't there? There's so many different moving parts. And I think our access to technology and information kind of speeds up news, if you like, and it speeds up some of the dynamics that are unfolding around the world when it comes to the improvement of property investment, the improvement of technologies. And I think really when we analyze one of the biggest trends coming our way into property investment, it is the trend of technology inside of real estate. Real estate into the future is going to be very much driven by smart economics, smart technology. And I think for a lot of real estate out there that is in underperforming marketplaces, the idea of improving it with smart technology, it's just too far apart. And for me, I love to invest in real estate where there's the knowledge economy, where there's the knowledge worker. And I like to buy real estate which is more modern, which can adapt to the acceleration inside of real estate when it comes to technology. And we haven't seen anything yet. So my word of warning for property investors when it comes to future economics around technology is to brace yourself for change, because we know that, for example, electric cars are going to be the cars of the future. I mean, 1 in 5 cars rolling off the German production line of cars at the moment is electric. It's only going to get bigger and bigger. So, of course, this is going to have an impact on what real estate and how real estate works. We're going to have to retrofit electric car chargers into homes, into apartments, into townhomes. It is going to be a real thing. And again, the consumer of tomorrow is going to be very, very different. And I think if you are holding something very old, antiquated, past its use by date when it comes to property, it could come back to bite you. I mean, some of the technology which is unfolding around the world is mind-blowing. Now, I'm a big fan of traveling. One of my favorite countries to go to is Japan. And I've been there many, many times. And I love Japan because it's kind of like one of these countries which has never really ever been invaded to the point where the population is very self-centric. It is very unique. It's not really driven by outside culture. One of the things I love about Japan is the Toto toilet system. Anyone who's been to Japan would have ridden the Toto. It is an amazing experience when it comes to going to the bathroom. And again, some of the technology coming out of Toto is amazing. In fact, one of my greatest days traveling Japan was going to the Toto toilet factory. Yeah, I know that doesn't sound pleasant. That doesn't even sound entertaining. Why would you go to the Toto toilet factory? Going to the toilet is going to be the future of real estate. Yes, that sounds crazy, I know, but what is unfolding is that big data is starting to run economics. Big data is starting to run technologies, and gut health and so forth can be studied by going to the bathroom. And into the future, and what is coming soon to real estate is the idea that you will be able to own or rent a property where your well-being can be studied through going to the bathroom. And that sounds crazy, right? But what if real estate could help you live longer or be fitter or be monitored in a more well-being state just by that technology, just by going to the bathroom? So some of this stuff is mind-blowing, and it is coming your way when it comes to real estate. It's probably a 2030 thing, 2035 thing, but I think the most important part of buying real estate today is just making sure you've got good bones when it comes to the real estate you own. You want something that can retrofit into smart technologies that can, there's the cough. Did you hear the cough? That you can start to link into what is coming our way. So, you want good plumbing, good electronics, good bones of the home. You don't want wiring dating back, 45, 55 years anymore, because again, some of the things that the consumers will want tomorrow around technology is game changing to where we are. They're going to want solar. They're going to want the Toto flush system. They're going to want electric cars. They're going to want, smart homes, which are energy efficient. So I'm buying this stuff, by the way. I'm designing a smart home right now, and it was my latest property investment. I settled in a year. I bought it pre-construction. It's already gone up. It's doing its thing as a property investment. But the cool thing behind the scenes is it is a smart home. It is really my first property which is designed around smart economics. Everything with the home is sustainable and smart. And I can't wait to discuss that property once it's complete what it's going to look like, how it delivers this technology to the consumers. I think it's amazing. And it is coming soon, but it's already here. It's one of the first trends I think property investors need to really switch on to. If you're going to buy like an old decrepit home, it's going to be hard to retrofit the Toto flush system into it, right? So we just know to be mindful that we want something a little bit more modern. It doesn't need to be brand new, but it needs to be functional. We want that functional capability when it comes to real estate. I think the next thing coming into the marketplace, the next trend, if you like, is inflation economics, right? Inflation economics is just the idea that when things cost more, people start to get more sort of jittery. And of course, we have seen the idea of people becoming nomads, people leaving cities, going to live in Timbuktu. And of course, I think with inflation economics, we're going to see a bit of a reversal of that trend. I think, of course, the Zoom boom, the great Zoom boom, which is unfolding, is very, very helpful to people being able to live and work in different places. But of course, I think there are some headwinds when it comes to, obviously, inflation at a global level. And I think when people start to feel uncertain about the cost of living, they tend to be a little bit more uncertain around job security. And because people start to go, well, if I was to move too regional or become too nomadic and I got cut off from economics, will that disadvantage me? And I think what we have seen is a great trend in a deflationary marketplace where money is worthless to just go, I can go anywhere. Will that reverse into the future if money is quite expensive to borrow? And I'm talking at a global level because some countries, things are just going to be even more chaotic than here in Australia. We're kind of blessed in Australia when it comes to inflation being not as out of control as it is in certainly Europe and the USA at the moment. But I think what is interesting is inflation economics. How do people behave when their buying power is dropping, when it costs more to run their economics? What do they give up to support property prices being more expensive? What do they give up to support rent being more expensive? And of course, this is where you go back to the basics. What do people need and what do people want? And I think we're going to see the want part of economics, deteriorate. For example, I just bought, a couple of weeks ago, I bought a bucket load of shares in a wheat company. Yes, wheat. And of course, obviously, off the back of what is going on in the Ukraine, there's going to be a shortage of wheat, and you put two and two together. But bread is a fundamental staple of humanity. Like, people need a piece of toast in the morning in most countries. They don't need Netflix. They need a piece of toast. And so with inflation economics, will, for example, people start to turn off subscriptions to things they don't necessarily need? Do people need Foxtel? Well, the answer is no, they don't, but they do need the piece of toast. And I think when it comes to economics, right, you're going to go, well, when it comes to real estate in an inflationary marketplace, people are going to, well, I'm going to look after my home. I'm going to sort that out. I'm going to make sure I can pay my bills there. But what do they go and give up? What discretionary items are going to get carved up in an inflationary marketplace? And this is where the rubber meets the road, right? And, I wouldn't own discretionary shares in stocks at the moment. Like any company which is discretionary based, like it's really built around something that people can have when they've got an abundance, but they don't need when they don't, you probably would find that there's the cough. That stuff is not good for your portfolio. So if you got shares in things which are, fundamentally going to break when things cost more, you probably want to ditch them and go into more substantial, real need-based stuff like a piece of toast, right? Or that, this is the economics unfolding. And I think the other economic conversation or trend is, well, how does Bitcoin go in an inflationary marketplace? I don't know the answer to that because Bitcoin has appeared in economics when we have gone through deflation, not inflation. And early signs with inflation occurring, it doesn't seem to mirror what is considered a safe haven with inflation, which is gold, right? Gold is an asset that you own when everything else is going wrong. Like that is the safeguard. It's kind of like the hedge against things like inflation around the world. Bitcoin doesn't seem to be following that trend, but obviously it's very volatile. It moves up and down every day. But I do wonder what will happen if, for example, the average person in America, the average person in Europe has less buying power because of inflation. Their wage doesn't cover what it costs to buy stuff, and they've got some crypto. Do they all of a sudden go, you know what? I think I should pull out. And of course, crypto is based on supply of new people coming into the funnel. And if there's less new people coming into the funnel, more people leaving the funnel, does that push the price of crypto down? So I think inflation economics is going to be a real trend, and it's going to be clickbait all throughout the news. And this is the stuff I think will meddle with the psychology of property investors. Is like you might start to see, a crypto, reversal of fortunes. And of course, does that, go, oh, well, that, the real estate market, could be next. Or you're going to see shit shares that are basically based around the idea of discretionary money, basically not reporting the profits that they, have reported in the past. And of course, that's probably going to mean the price of those shares come down. And I've been talking about this for a while. Like there's overpriced stocks in the economy at the moment where there is less customers for that stock than you could possibly imagine, but there's more investors in the stock. There's the cough. I think we are going to see an increasing demand for overseas migration coming to Australia. I think it's probably the next trend that we need to discuss. I think this is going to play out in two ways, and this is just my prediction, right? I think there's going to be less tourists. I think tourism is, coming back around the world, but people are still, I guess, a little bit nervous around, traveling overseas, lockdowns. There's still a bit of post-traumatic stress syndrome when it comes to travel overseas. And so I think here in Australia, we're all going to travel internally. I think you'll find that the trend will be to go to, Thredbo, as opposed to going to Steamboat in Colorado. That's going to be the real trend. But I do think tourism will struggle when it comes to overseas tourists coming to Australia. Do I see boatloads of Chinese tourists coming back to Australia? I don't think so. I think it's over. And so once Australian tourists start to go overseas, potentially we could be losing out on tourism, which kind of sucks, right? But for now, things are good because people are going, the amount of people I know that have been to Hamilton Island in the last, year it blows my mind. And, having been to Hamilton Island, you're like, all right, you drive around in the golf buggy, you have some lunch, you swim in the pool, and, you have to wear that weird suit to go swimming with jellyfish. And you're like, wow, there's so many amazing places around the world, but no one wants to go to them. They'd rather go to Hamilton Island, make sure they have a holiday, right? So there's the cough. I told you if the cough comes, you might hate the show. But I do think one of the trends we will see is the return of certainly migration into the country, students. We're starting to see early signs of it. Will it get back to the levels we wanted to? I think it eventually will. I think Australia is a pretty good option with what is going on around the world, with wars in Europe, with some of the economic challenges in Europe and places like that. I think people will go, you know what, I'm going to go and give this a go. This is the year to do it. This is the year to get a working visa into Australia, a tourism working visa. And I think you will see a lot of government support to bring migration into the country. I think the next trend, which I absolutely are seeing right now, is the idea that today we live in a dislocated world. It's broken. You have people like myself with shitloads of pieces of property, and then you've got other people with no property whatsoever, right? And so we are seeing, again, the rich getting richer. It's a real trend, but now the rich are owning two properties to actually live in two properties. We've never really seen this before play out. More so, we've seen people have a holiday home. Now we're seeing a lot of people living between two places. They have their place in Sydney and their place down the coast, and they're kind of sharing, if you like, the two home marketplace. So I think this is the future, to be honest with you. And I talk to a lot of property people at the moment around, particularly developers. I'm like, well, there's a two-home market at the moment for the wealthy inside of Australia. Why don't you offer a two-home solution? Why wouldn't that be a thing? For example, why not offer a new property in the north coast of New South Wales, a hotspot like Casuarina or something like that, and also a property, in Brisbane? Put the bundle together. And I think the wealthy will start to buy bundles. This is pure speculation from me, but I think the offer into the future is a hybrid. It is for the competitive nature of real estate to unfold. I think the biggest players like the Mirvacs, the Lend Leases of the world will start to think about this. Well, today people want actually a double home experience. They want to be near the coast, but they also want to be near the city. Do we factor in a house and a pied-à-terre? And obviously people can sort of self-select to do that at the moment, but I think you'll find into the future companies start to offer it as a bundle, we'll 2 for 1 kind of concept, right? And we are starting to see that the world is dislocated. The rich are getting richer, 2 homes. The poor, they can't even buy one. And if they are buying one, they're having to go to some pretty incredibly terrible places to buy them, right? And so we are seeing definitely this trend unfold, which is, it is what it is, right? So there's the cough. The COVID cough, the spicy cough. It doesn't end, does it? So I think for the next few episodes, we're going to have the spicy cough, folks, and hopefully one day I can shake it. But that's COVID. Now, I tell you what, a trend which is here to stay. It's already here now. It's not even coming down the road, right? Is living local, a sense of localism, a sense of being proud of being local. And I think what you are seeing is like suburbs become brands, and it's crazy, right? When you think about buying beer, now you buy the Byron Bay beer. Like Byron Bay is so famous, it's now got its own beer. Newstead has got its own beer. Bondi has got its own beer. Like all of a sudden, the idea of local and designing things around localism, tribalism, man, it's massive, and it does connect to the property market. I come from Four Pines country for beer, right? Like Four Pines is a manly beer. It's pretty good beer. I think everyone loves Four Pines Brewery beer, but it is designed around the suburb of Manly. And again, all of these kind of extra subliminal nudges, if you like, and I've talked about nudges in a previous podcast. Go back 2 or 3 podcasts, and you can hear about the idea of nudge theory. But again, like we are now seeing a trend of localism, and the more a community comes together around its local identity, we are seeing a correlating result in property values increasing. And yeah, like the idea of brands bring other brands. And so what's so fascinating is like if a local suburb starts to believe in itself and build brands around itself, then all of a sudden major retailer brands want to be connected to that brand. You start to see Mercedes dealerships selling, ridiculously expensive cars being connected to basically beer companies that are local microbreweries. And again, you're probably thinking, well, what's all this got to do with the price of fish? It has a big influence on the price of fish, because the price of fish is the price of real estate. And again, the more retail that is sophisticated in your neighborhood, the better off your neighborhood's going to be, the better the attraction magnet of your neighborhood, the better the culture is of your neighborhood. So we're absolutely seeing these trends unfold. And again, one of the ways you could study real estate is based around, you could do the microbrewery tour. Like microbreweries are bringing with it a brand, which is then bringing better brands to a neighborhood. And you're starting to see this kind of localized gentrification, which I think is a real trend into the real estate marketplace. I think probably the biggest trend that is here to stay is natural foundations. Like people realize now all of a sudden that if they're not in a suburb with great green space or art space or blue space, then they're in the wrong neighborhood. And again, this is creating this extremistan effect where in real estate terms, suburbs or neighborhoods with great space are now considered so valuable. And from a real estate perspective, we've kind of starting to see that suburbs with this missing piece of social infrastructure are just, they're broken spaces, and they're not working, and people don't want to pay a premium for them. And so, from a property investor's perspective, I just think, you can work on 3 theories, if you like, when it comes to where to buy real estate: green space, blue space, and art space. Simple as that. And obviously the green space is trees and parklands and, again, social infrastructure, which is blessed. Like if you go to a green suburb, you kind of feel better, and it's nice to walk the dog, and it's a nice sense of community. Blue space is really taken off, right? Let's face it. When you think about blue space, what is it? Well, it's coastal beachland, it's inland waterways, it's aquatic environments located close to the sea, marine harbors. And, Sydney's always been about its blue space. Like if you look at the real estate, which is the most prime, the stuff which has gone up the most, the stuff which is now unaffordable to, the mass marketplace, the stuff that everyone wants, it's either on Sydney's coastline beaches, it's either in its inland waterways, or like its harbors or its rivers, or part of some of its marine sanctuaries, right? And, like if you go to the northern beaches, like the marine sanctuary of Shelley Beach, Furry Bow, houses are $25 million, $25 million. So again, there's the cough. If we, can just take a little bit of this knowledge and we go, well, is this a trend which is going to break, or is this a trend which is going to grow? I think it's pretty easy to comprehend that natural space means a hell of a lot to the marketplace. And as a trend, like blue space, green space, and the final space, which is what I call art space, which we might talk about as a evolving trend on its own when it comes to where CBDs are. But like at the end of the day, excuse me, at the end of the day, this again, art, coffee shop, where the artistic things of society are just going to be so valuable into the future. And I think, if you want some herbs and spices to your real estate investment, those three things, if you can get them, or one of those three things, if you can get it, is just incredibly powerful. I think what we've also realized is real estate is a human sport. It is very much a trend now for real estate to mirror human conditions. Like, for example, mental health is a real problem, right? It's a real thing. If a suburb makes someone feel mentally better because they're connected to better community, better neighborhood, better green space, better blue space, better art space, they've got more to do on the weekend, they've got social connectivity, then they're just happier, right? And, happier suburbs are just more valuable suburbs to own real estate in. Unhappy suburbs, they are probably below the median value of real estate today because they just create social inequality. And again, you're seeing this amazing trend unfold where, how important is access to a fresh farmer's market on the weekend? All of a sudden it means something, right? People are like, wow, I want fresh food. I want grass-fed meat. I want organic vegetables. And again, for a lot of the society, like the more of this stuff created, the more valuable we are starting to see real estate become. I think the next trend, which I'm absolutely seeing unfold in real estate, which creates a direct threat for anyone who owns real estate but doesn't value the idea of capital costs. Like I always say this, the biggest problem with real estate is capital costs, is upgrading your real estate to be relevant to the marketplace. Like we are seeing some incredible energizing architecture being created across our cities. And, it's a real key to, like values of neighborhoods. Like the better properties being built in neighborhoods, the more impressive those neighborhoods are becoming. And, despite the building challenges, what I'm saying is, without question, people are opting, if they can afford it, to go and knock down and rebuild and build a new, better home for a better living experience, for a more energizing living experience, rather than taking on a property which, is going to be dysfunctional to live in for a very, very long time. And so, we're seeing some huge results of knockdown rebuilds and people making money. and the secondhand market really looking to pay a premium for anything that is designed well. And I think, we're starting to see some incredible ideas around what that actually looks like. I think we are going to see some further trends when it comes to the idea of renewables. Without question, the ESG movement is a big thing, and I've talked about this in the past as well. Like, at the end of the day, the ESG movement, if you like, or environmental and sustainable governance, is going to be a real problem for real estate, because obviously we have some pretty major targets when it comes to climate change efficiency across the globe. All the targets to be, in line with some of the agreements that have been put together across the globe when it comes to 2050. It means government has to act. And of course, here in Australia, we are going to see buildings that now, when they are created, have to be more sustainable. And of course, there's a price that has. And of course, the more energy efficient and more sustainable, the more governed something becomes, the less of it generally can be created. And I think probably the biggest trend I'm seeing in real estate is just how hard it is to create supply now. Not only do you have extra costs to generally build, or if you've got a really old property, the extra costs to upgrade it are just so restrictive when it comes to renovation. And then on top of that, you've got the ESG movement, which basically in itself makes town planning and the idea of production just very, very difficult. I mean, today to build stuff, you need to have the right, wind tunnel. You have to have the right thermal efficiency of the asset. You have to have the right glazing, the right brickwork. Like, it all comes at a cost. And again, where Australian real estate is going is to 7-star Natters thermal efficiency, which is great for the environment. But again, it's going to mean less real estate is produced because of the cost to produce it. And we're starting to see this now, where developments just will never get off the ground, and development sites are becoming worthless because the cost to deliver the product, it's not so much just the cost to build, it's the cost to build sustainably. And again, when I look at my own life, I love this stuff. I love trying to find the best sustainable real estate in the world. I even, for every property deal that I put together for a client, I personally, through business, pay to offset the carbon footprint of that asset, because, I just want to do the right thing by the world, leave the world a better place. Whether that's right or wrong or part of your belief system, that's cool. But the reality is, to design real estate into the future with the right thermal efficiency comes at a cost, and it means that there's just going to be less stock. And again, I like the odds of that as a property investor. I like the fact that more modern stock is actually in far fewer supply than much older stock. And there's an abundant amount of much older stock, but actually the new stock, which is thermally graded really highly, is very, very undersupplied. And the future outlook of that supply at the moment is very, very much not looking good. And I really don't see it getting any better anytime soon because of the governance of it, right? And if it was much looser, you would have more stock being created. If government wasn't taking as much taxes as they do on real estate being created, you would see more of it. But right now you won't. And I don't think you'll see large volumes of stock being created until a structural shift comes along. Past structural shifts when it comes to stock production, we used to have a lot of, for example, foreign investors buy real estate here in Australia, but they got chased off because of taxes. So they would take, money out of their economy, currency trade into Australia's economy and build stock. A lot of that stock, no Aussies wanted to live in. It was shit stock, but it would create stock nonetheless. Now we don't have that. We don't have a lot of our big builders and developers around to deliver stock. I actually think it's almost impossible to deliver an apartment at the moment. I am finding that, we are going to be in a massive apartment undersupply. And I tell you what, if you missed the housing boom, you may just pick up the apartment boom, because if we have a couple more years like this with an aging boomer population, geez, by 3-4 years from now, when people are downsizing, there's no stock to downsize into. So anything you're holding may just, become highly valuable. I think before coronavirus came along, before the pandemic, what I was seeing was, and what I was telling people, I was telling people this before the pandemic, that renters and of course even owner-occupiers want to live, work and play in the same place. I lectured at the University of Sydney on my urban behavioral economy, which is the idea that today, to galvanize a community, you need live, work and play. You need a property where you can live, work and play. You can live there, you can work there, and you can go into the community and play there. And if you add on top of that the idea of sustainability and wellness, and the idea of knowledge and smart economics, and the idea of movement, you've got the perfect real estate community. You've got the perfect real estate marketplace. That trend, by the way, is still flowing, right? And if we examine what consumers want, they want more space. And what is so fascinating, I think, about real estate at the moment is spatial transformation. Is that all of a sudden we are seeing a shortage of real estate because people require more space. All of a sudden, a 4-bedroom home where normally 4 people would rent together, only 3 people are renting, and the extra space is used for work or play, right? And again, this is transforming real estate, right? This is meaning we need more real estate, but because the current stockpile is being used differently, and it's blowing real estate up. And again, there's some pretty amazing sort of statistics unfolding that all of a sudden you take the 2-home market where people want 2 properties now, not 1. The renters want more space. People aren't sharing at the density levels they once did. And of course that you are now seeing people use home offices and things like that. Man, it is blowing space apart, and everything has been upgraded. Now, basically, instead of 3 people living in a 2-bedroom apartment, 2 people do. Or instead of, wanting, everyone is looking for more space. And the best real estate which offers a spatial solution is in hot demand. And I think it's probably fair to say that, again, when we look at real estate, it's very 2-tiered. What people want and what real estate is out there there's a disconnect. What people can get and what they want, there's a disconnect. And, over time, we've just noticed that, if you can own the stuff what people want, which is in undersupply, then you're going to do much better than owning the stock which people don't necessarily want, which is not in oversupply, right? For example, I've got a 3-bedroom property which I amalgamated. I bought a 2-bedroom apartment, a 1-bedroom apartment. I redesigned the floor plan. I used interior designers to help me, and I'm about to settle that property, right? Like, that 3-bedroom property is like 160 square meters, elevated, north facing, beautiful views. Like, I know who wants that property, everybody, because there's not that many of them, right? And again, particularly with where house prices have got to, the next best thing is that, and that there's none of them in the right neighborhood. So again, if you can afford to play in that space where you can design space, you're off to the races with real estate over the next decade. You're going to make a lot of money. You're going to get good rents. Where people will struggle with real estate is, of course, if they're on a budget, they've got more volatility, more moving parts. And it's not to say you're not going to be successful in real estate. It's just that we have seen, and a real trend that we have seen in real estate is the more you spend on better assets, the better off you're going to be from a capital growth proposition. So that may mean you play in the dirt for a bit. I've certainly had to play in the dirt. It sometimes works out that way. You've just got to wheel and deal a bit to get up the food chain, and you can end up in a place where you want to be. I think the next trend we are absolutely seeing unfold in real estate is the transformation of CBDs. Like, central business districts are now morphing, and I love this. I love what is going on. I think owning real estate closer to the city is going to be even more valuable than ever before. And I know that is a bit contrarian to, the idea that people are moving down the coast to live in a sleepy little village. But I think the opposite is actually going to unfold inside of cities, that 5 years from now, when the pandemic is a bit of an afterthought, people are going to go, well, where is the culture? And I think CBDs are going to morph from a central business district to a central arts district, or a cultural arts district, a CAD. So a CBD is going to be a CAD, a cultural arts district. And man, it's going to be like when you think about European cities, like they are awesome. Or even like Asian cities and stuff, like they're 24 hours. You're like having dinner at 11 o'clock at night. You're having, crazy, like food and events and culture and listening to music and bands, and like, it's just action, right? And one of the things that Australian CBDs have failed at is being actually fun. They've been great places for people to go to work. They still are great places for people to work. They will always be places for people to go to work. They are really connected to the FIRE economy, finance, insurance, and real estate, which, of course, as we know from this podcast, if you go back to population economics, is the massive driver of everything. But interesting enough, and I speak to my dad, who's a bit of a historian. For me, a bit of a dinosaur. You couldn't live in the CBD of Sydney in the 1960s. It wasn't zoned for someone to live there, right? You couldn't actually get a permit to live in a property in the CBD of Sydney. The zoning would not allow it. And you think of the great cities of the world, like people are living in those areas and thriving, and it's 24 hour, and you go to New York, it's action. And this is all changing. Like, this is changing before our eyes. Now, I'm not advocating going and buying a property in the middle of the CBD because, there's just, it's a bit volatile. But the point I'm alluding to is, like, Australians have traditionally grown up in suburbs around the CBD, looking at the city. That's going to continue to be a thing, but the city itself is going to be a centerpiece of culture and arts, and it's going to be more than jobs. It's going to be more than businesses. You're going to see outdoor dining. You're going to see way more action when it comes to the arts and culture scene. And look, I'm a big fan of arts and culture. Like, I like spending my weekend, I'll go to the beach, but I also want to go to the museum or to the art exhibition or to see the play or to, see the opera, or, like, there's plenty of people like me. And again, like, cutting yourself off from that dynamic, I think what we will see, and a trend into the future, is people going, well, wow, I want to live near the city because, we got the festivals, we've got the the shows, we've got the new food and eateries, and, like, the weekend value or the weeknight value of the CBDs will change. And I think we'll get to a point where, particularly with e-commerce being quite popular, there is less need for businesses today to have more overheads, more shops. Like, you if you're a retailer, you only need 3 or 4 key outlets in a city today to maintain your brand proposition. Once upon a time, you needed 30, spread out everywhere, because the only place that people would have to buy your products was come to you. Now you need 5 of them. But taking that a step further, like, as we know, if you go retailing in Hong Kong, like, you're not buying something at 11 o'clock in the morning, you're buying at 11 o'clock at night. And I think what we will start to see is the evolution of that in Australia, where CBDs are not only places to have a beer and a drink and skylark and be a mongrel. You can go for a shopping experience at 11 o'clock at night and have a bar me and buy a pair of Nikes. Like, that in itself will revolutionize the hub and hive and energy of these kind of places, which is pretty exciting when it comes to what that looks like to me. I think the next trend, maybe the final trend for today, is definitely generational appeal. This is morphing. This is changing. What baby boomer accepts and what Gen Z coming through the system, entering the real estate market, wants. Completely different set of rules. Like, what's important to baby boomer and what is important to Gen Z, 2 different worlds. And if you study demographics, and there's great demographers out there, the McCrindle team do a great job at this kind of stuff, is, Gen Z value, for example, and Gen Z, like, these are 20-year-olds, right? These are babies. What they care, like, Greta Thunberg was their hero, right? Like, they grew up in a different space to you and me. Like, I was smoking Benson and Hedges, smashing bourbon and cokes in a pub, trying to get a girl's telephone number. These guys, like, they've grown up, like, with an iPad on their forehead, understanding, like, I don't even think they can watch a movie because they've grown up on short form content. They can only last 2 minutes, like, looking at a TikTok. Try and watch a movie with a Gen Z, they're not even interested, right? So for them, their top, I guess, things that they care about is, 1, environmental impact. So let's go back to what I was talking about before. Like, the consumer of tomorrow wants the modern property. Like that, like, you may think it's a shit idea, but guess what? You're probably a Gen X or a baby boomer. Gen Z think about environmental impacts as their first thought process when it comes to consumer decision making. They think about social impact. So ESG, this is the thing. This is what they care about, right? They care about, well, if I'm going to buy a property, like what does that mean for the greater good? Which is interesting. And then thirdly, they think of well-being, like are they going to be happier living in this property or owning this property? It's a very different space to how you and I probably grew up. If you're listening, if you're a Gen X or Gen Y, like our big issues were financial. We wanted to crush the financial world. We wanted to, get a good job and hold it down and never change job. So completely different set of rules when it comes to generational appeal. And that's what I love about real estate, right? Is like, and I've experienced this. I bought a property where my generation viewed that suburb as a dump. However, the next generation coming through in this particular situation, Generation Y, which was coming through underneath me, like I consciously knew that generation, once they were at the point of what they could afford, would see that suburb as a gold mine because of where it was located when it came to its neighborhood. It was, located near the beach, right? It was a beach neighborhood, which my generation saw as a shithole. Like you wouldn't go there. Someone would take your shoes. Like someone would try and smash your face in. Some bloody surfy would try and punch you. However, it had the right fundamentals from a livability point of view. And then when the next generation came through and, they were just happy hipsters, they liked the happy hipster suburb. They created the happy hipster suburb. So understanding how generations form and their next decision-making in the process is quite interesting to me. I like to sometimes consider that when I buy real estate, I'm either considering a generation above me for its future use or below me for its future use. And obviously, when it comes to affordability of real estate, generally, if you're on a budget as a property investor, you probably want to consider the generation that is coming through the system at, depending how old you are, it could be your generation or the generation below you, right? Like what do they value? How do they engage with activity? What's important to them? How would they like to live their life? Will they be wanting the Toto flush system because they value well-being in their world? I think they will, right? All right, guys. Well, thanks for tuning in to the Urban Property Investor. We're about to reach the 1 hour mark, which of course means the show is coming to an end. Was it a success? Was it a failure? I never know. You can let me know if you think it was good. Leave a review. All right. I will catch you next time as we crack some more real estate codes. Thanks for tuning in to the Urban Property Investor. To never miss an episode, make sure you subscribe to the podcast on your favorite app or on YouTube. And I would love it if you could give the show a rating and share it with your friends and family. In between episodes, you can always keep in touch with me by connecting on social media over Facebook, Instagram, or LinkedIn. Until we meet again on the next episode of the Urban Property Investor, take care and bye for now.